Over the last 18 to 20 months, we've seen inflation explode.
The future lies in blockchain transactions, and Ether is going to be a better lubricant of those blockchain transactions.
Right.
You could actually argue that Ether has a stronger upside story than Bitcoin does.
Gold is down 7 or 8% on a nominal basis. It's down double digits on a real return basis. Bitcoin, however, is up over 400%.
Generally, you FOMO into these things because they're ripping, and then you buy them too high and they correct for another few weeks and you look like an idiot. They're really hard because you don't know what's going to explode. You have to be really in the space to see where the adoption's happening. So what I did first is I bought a basket of maybe 15 different tokens across everything from DeFi to these new layer ones. And then I kind of assessed, I kind of chucked a couple out that I was like, I don't really know much about this. I'm not seeing much kind of network behavior online where people are talking about it as much, and then tried to add into places where I thought there could be better outcomes, such as Solana. But, I can't take full risk in it. I understand that people can because they're in the space. I'm just not deep enough in all these protocols to do that. So I just have to accept that the tail's going to go up. If I can get good quality within the tail, I don't need to do the most speculative assets. I don't really want to do that, but other people can, and that's fine. But I think this middle rump is where you can make some really great returns, and that's kind of proven out to be the case so far. The reason you hear from all those agencies is there's a fight going on to who's to regulate it, right? Is it a commodity? Is it a currency? Is it a security, right? So that's clear that they've got a shit fight going on. So basically what we have to do is decide how to do this. So Gensler's making his play. He's saying, well, everything's a security. Fine. If you want to define it that way, that's okay too. Security doesn't make it illegal or a terrible thing. I mean, Apple's a security, and so is the US Treasury. So that's okay. But what you're going to have to do is change what securities laws, what that means. Because if you are going to stop the pace of development and innovation, you're going to shoot yourself in the foot, and it will be arbitraged away by going to different jurisdictions. So the US is hampered by this ridiculous 1934 securities law and the Howey test. So people use that as the big thing. See, it's a security. It's like, yeah, but that doesn't mean it's criminal activity. It means how you issue something and who's allowed to buy it is somewhat restricted. Now, is that the right thing to do? Is this what the world should be doing? Should we be restricting young people with less savings from this new exciting technology or not? My view is we should not. Much like we shouldn't stop them investing in startups. We should give them warnings. We should give them understanding, some education about what they're doing. But people need to be allowed to do this because they're allowed to go to Vegas. They're allowed to throw all of their pay and all of their life savings, and nobody gives a shit. Zero regulations. They can lend it to their uncle who steals it. No regulations. But heaven forbid if you buy something that's listed as a security, the ridiculous laws around accredited investors, it's just morally wrong and it doesn't stand up. So I think this is the battle that's going to get fought. I think the battle is Gensler is laying out the hard case. Everything's security. We're going to stop prosecuting people and then we'll figure it out. And I think the industry is going to coalesce along with voters. We're going to coalesce around securities industry that we grew up with. We're not going to accept it. And so there's going to be a fight. And that fight will lead to a grand compromise. And that grand compromise was exactly what happened to the internet regulation and phone regulations beforehand. It will come, but it won't be easy. So my guess is if we do have another bear market phase that comes in somewhere in 2022, I think it starts later, 2022, 2023, it's all going to be about the fight of regulation and that mixed signal that's going to keep people away from the space. And it's going to push innovation to countries where it's clearer, such as South Korea or Singapore and other countries where they've made the regulation much clearer. So there's a lot to play for here. It's going to get ugly. Classic negotiation skills are always start with a hard line because it gives you the upper hand. Because what you're trying to do is there's the middle line. You're trying to get it incrementally over the middle line further in your direction. And Gensler wants that because he regulates securities. So of course he does. Now, and our job is to get it somewhere across the other side. And the answer is going to be somewhere in the middle. Let's see who wins. If what I think is going to happen is this 2 trillion is maybe 10 trillion by, let's say, March of next year, what are you going to do then? What are you going to do with the NFTs? What are you going to do with these social tokens? What are you going to do with DeFi? You cannot go back, find a bunch of people, say you were naughty. Who's the voice of God here? Who knows what DeFi protocol is going to survive and which one isn't? What, some guy in the SEC goes, this is a good project and that's a bad No, the market makes that decision. That is the job of the market. Now, you're seeing the younger generation taking more risk than was traditional for us. And the reason being is options, Robinhood, and they're like, fuck it, I've got my one chance, and they're taking more risk. That's good. There's nothing wrong with risk taking, just as long as people understand options are great because you can only lose what you put in. Now, if you put in your life savings, that's a pretty stupid thing. But you see it on Wall Street Bets that they kind of acknowledge that and they laugh about their losses. But what you're doing is mass educating all of these people about risk taking. And I think they're going to be larger risk takers than our generation, the Gen Xers were, or the particularly the baby boomers that were much less risk takers. So it's fascinating what's playing out. I was doing some work on this on the weekend for Global Macro Investor. I'm kind of a little bit overly bullish right now. And I think the cycle, well, no, because that's not fair because I was looking at the cycle itself. I think Bitcoin somewhere north of 200 and ETH closer to 15K. But I think we finished the cycle with Bitcoin close to 400 and ETH closer to 40,000. I think if it's the ongoing process, the fact that you and I, when we did this, the last interview in not the last one, that big interview in 2020, we had to do it in person. Right now, we just use Zoom. Right, we're now living digitally, and me seeing you. I mean, I have drinks with friends on Zoom. It's normal now. It doesn't bother me. Right. So we've now moved a massive step into the digital world, where just meeting our friends or meeting people we know can happen over video link, and we don't really care. Much like that happened with mobile phones and phones before that. And television and all of these things. So this is an ongoing move into the digital world. And then it accelerates because you start to see the rise of cryptocurrency, and that enables these ecosystems to develop into these rich worlds where you can create value, exchange value, own things. So this creates the other layer. Then the layers on top of that come 5G, distributed computing power, and a bunch of other things that are going to scale that faster. So once you've got the computing power, because right now most of our computers are not gaming computers, so we can't render in the speed we need to render. So we get left with crypto voxels and Decentraland being clunky, and all of the cool kids are on Epic Games and they've got 4K, but we don't have the computing power to do it. All of that is going to change. So all this is the metaverse. It gets thought of in so many ways. For me, it's like our digital fluidity, where we can live and move around in this digital space, interact with our physical space, whether it's through augmented reality, virtual reality, just normal kind of digital world, and we can kind of create lives within it. So we're creating income streams. We're seeing that with Axie Infinity right now. Or we can be educated in the metaverse that kind of levels the playing field. I mean, you can be a kid in Ethiopia. You know it's going to happen because everybody from Microsoft to Facebook to Apple have basically said this is the bet. It's augmented reality, virtual reality, the metaverse. I spoke to the head of metaverse who knew there was one at AWS, and they're building out the computing power and the cloud storage abilities for all of these massive compute needs, right? So it's happening. Now, the battle is going to be, as ever, the same battle, decentralized versus centralized. And as ever, it'll be a mixture of both, and we get to choose. But that's all coming. And that's a hugely exciting thing. And people haven't really figured this out yet. But again, it's going to be an enormous generator of wealth as the world moves into the digital world.